Okay. Okay. Well, you please confirm the meeting is not live streamed.
Yeah, almost. Almost. It's connecting. Just few minutes or even seconds. Just let's give it. Yes, I think it's now live. Control C.
Okay, so when we are going to set that up, you can try as much as possible to state where you are joining in from. Like me, for instance, I'm joining from Port Harcourt, Nigeria. I'm currently listening to this event from the house and trying to moderate the event as well. So I have one answer. I have Alobi Nentuai. I hope I've not murdered your name. So I'm going to ask you to unmute so you can speak. So, Mr. Alobi, you can unmute and speak now.
All right. Thank you very much for this privilege. My name is Alobi, as you call Nentui, rather Nentui. I'm joining from
Okay.
Yes, I'm joining from Akure, Ondo State. You asked for our expectation. You know, this whole tax thing, I've not been able to go study it and know what is involved as a business person. You know, so when I saw the invite, I thought it's an opportunity to learn what it is about. Thank you.
Okay, thank you
All
very
right,
much,
thank
sir.
you.
That's very noted. We have Gloria. I will ask you to unmute and then you can speak. Over to you, Gloria. Hello, Gloria. Can you hear me? Okay. Let's hear from Sunday. Tell us your expectations. Tell us where you are joining in from.
After Mr. Sunday, we can go ahead.
Okay, thank you.
Okay, good afternoon, everyone, and happy New Year to every one of us. Okay, my name is Engineer Sunday Uduri. When I first saw the tax, the headline on the tax issue, I've had several talks on it, but I haven't really paid attention in terms of just snippets I've been getting all this. So when I saw this, I felt it's and being that I'm at home, it's time to actually let me pay attention and listen and get some more information. But based on the tidbits I've gotten about it, I've had a question pop up in my mind that I just hope this new tax law is they're going to be able to track every transaction and every other thing. The question that came to me was that these kidnappers, they do transactions too on these apps and POS and all of that. Would those be taxable too? Are they going to be trackable so that they can also tax them? Because those guys are earning money with that. And if they are going to be taxable, it does mean that government can actually have a handle on some of these things to control in terms of from security perspective. Just a funny question that came to my mind, but I felt it's something maybe the moderator will be able to, the speaker will be able to speak to as well. All the same, I'm listening from Lagos and from home. Thank you.
Okay, Mr. Sunday, I also find this funny. You wanted to know if the ransom that are being paid to the terrorists,
Are they
so
going
to
to be
say,
taxed on it?
are also going to be taxed.
But that's an earning
Okay.
too. They say every earning will be taxed.
Okay, thank you very much. You can mute yourself now. Okay, can we have you, Gloria? I'm going to ask you to unmute and speak so that we can start the session. So I've asked you to unmute so that you can speak.
Okay, thank you. Good evening. Can you hear me, please? Hello, can you hear me?
We can hear you. Please go ahead.
Okay. Yes, my name is Gloria. I am speaking from Enugu.
We can hear you. Please go ahead. We can hear you.
From Enugu. Can you? I'm speaking already. Hello.
Gloria, we can hear you. Please go ahead.
Okay. So my expectation from this meeting is to know why we are
Yeah, we
taxing
can
all of
hear
a
you. You
sudden.
can go ahead.
You know, why we're taxing, why it had to start now. Why now? I mean, there's been a lot of news around it, people with their own perspective, but there's this one that is striking to me that talked about being taxed, that the tax is going to the debt that Nigeria owes, and it's just a percentage of it that we are. I mean, the tax is going to just a percentage of the debts, not the entire debt that we owe the other countries. And how long is this going to be? Are we expecting to pay off our debts anytime soon so that we can be free as a country? You know, so I mean, I'm really into this. I want to know. I know that tax is good, but then are there moderations for people who are, you know, barely getting by? Is there a way to trace this, and can we be so sure that we're not going to be scammed? Because anything happens in this country and we don't say much, we are unable to say much, and for some people their money is their life. So I want to know if this is a risky game that Nigeria is playing, or is it something we can trust as a whole? You know, even though we're coming from a place of being politically accountable and stuff. So yeah, so just to learn. Thank you.
Okay, thank you very much, Glory, for your insight. You see, there are lots of expectations. There are lots of myths, misconceptions, confusions around this whole tax thing. For me, I was like, I'm looking for someone that will explain the new tax act to me as a baby. I'm going to look at myself like a 2-year-old baby that is learning to talk. So let's see what we'll glean from this session. I know there will be further clarity, further questions, but please note that this session is going to focus solely on personal income tax. The speaker is going to put more light on this. Wale is not on the call yet. I think he's logged off. So I want to welcome you once again to another Enlightenment series that is organized by Coda Safety Consult. This is the 93rd or 93rd edition of this Enlightenment series. This started sometime 2020. And Wale has tried as much as possible to put this on and on and on and on. And if you go to his YouTube page, you will see lots of webinars that have been conducted that you can just go back and play back on. And for me, I see that as good mind. You go there, tap into them and learn from it. So before we start, I want to share my screen so that I can introduce the speaker. So just hold on before my screen comes up. So today we'll be having Mr. Johnson Edward for our session today, and he's going to talk to us on the new Nigerian Tax Act, how they concern you. What is what information do you need to know about it? But let's get a brief introduction or understanding of who our speaker will be for today. So Mr. Johnson Edward, before I will start, I know the last time we must have seen, me and Mr. Johnson must have been, I think, December 2022. We were neighbors when I was in Calabar, and we have been viewing each other's status back and forth. And sometimes when I post some information, he reacts. I see some of his information he put on his WhatsApp status, all pertaining to Nigerian income, economy, state of the nation in regards to such matters. But I'm happy to say that he saw this and he was happy to volunteer himself to come out and give us presentation. So Mr. Johnson Edward is a professional accountant and a finance software consultant with a proven track record of impact and success. He's a graduate of marketing, University of Calabar, an accounting technician, and an associate member of the Institute of Chartered Accountants of Nigeria, ICANN. He has previously worked as an accountant in the educational sector and the retail sector, after which he joined Ayamba, Harcourt & Co., where he currently holds the role of an audit and tax manager. He also supports businesses in automating their accounting and internal control processes, internal control systems with financial solutions such as ZoBooks, Sage Business Cloud, QuickBooks Online, thereby helping them maintain clean books and saving them from avoidable tax exposures. Beyond traditional finance, audit, and tax, Mr. Johnson is also a 10 Analytics certified data analyst, highly skilled in using tools like Microsoft Excel and Power BI to model financial and non-financial data of businesses, which produce insights that help make them smarter and informed decisions. So you agree with me from our speaker's profile that he's the right person to talk to us on this. He's well grounded in this topic and he's going to do justice to it. So I'm going to share my screen and welcome Mr. Johnson Edward on the call so that I can share his own screen and go ahead. Over to you, sir.
Very good evening, Mr. Obanu Isaka. It is such a pleasure to be given this opportunity to talk to this most esteemed professional. As a professional myself, I appreciate the expertise and the solutions professionals bring to solve our everyday problems. So it was a pleasure when I was approached by you to speak to your HSE community. So I learned that this platform is called Coda Safety Consult. I want to thank, I want to thank the key person. I was in his last session, that was last week, and I learned quite a lot. So I believe, just as I learned last week, it is expected of me to also give what I have in terms of this tax. So thank you very much. So we are just going to go right in. I'm going to start to share my slides. I believe, is that okay with you? And I want
Yes,
to ask if everyone can hear me. Please, if you can hear me, just do a thumbs up or something. I want to confirm that I'm not speaking to myself.
Okay, from my own end, I can hear you.
Okay.
Yeah, we are having thumbs up.
Koda, Eze, thank you. It's a lot for me. Thank you. Okay, can I do without my video? Is that okay with you?
Yes, that is fine and good. That will help with the bandwidth.
Okay.
So when you start sharing your screen, I will let you know if it's up. Then you can proceed.
Thank you. So I'm starting to share now.
Okay, your screen is up, so you just talk. Oh, yeah, we can see your tax. You can see it now, so you can go ahead, sir.
Okay. So once again, you're welcome to this webinar. This webinar is titled The New Nigeria Tax Act, How They Concern You. How they concern you, you and I. In particular, your personal income. So in other words, we will be talking about personal income taxes or taxes of individuals, as it is called in the new Tax Act. So I have a very rich, compact, and impactful outline here. So I'll quickly go through it. So we'll be looking at taxation of individuals, employment income, profits from business, trade, profession, or vocation, ascertainment of total income of individual, rates of tax of individuals, ascertainment of chargeable income of an individual, case illustrations, and other notable provisions. Before I proceed to the next slide, I want to quickly acknowledge the expectation from the first three speakers who had to express themselves on what they they are actually looking forward to. So I heard of the guy who asked, who want to see how this tax will help to solve the problem of insecurity in Nigeria, kidnapping. Good. I also heard the expectation of the lady who is inquisitive about this tax law in lifting off the national debt burden of our country, whether it is even appropriate, and the accountability aspect of it. Good. And I also heard from Mr. Abanum himself, who is very expectant to be taught like a baby, who want to learn all this like a baby. Good. I want to give you my word that we were going to do justice to it, and I will try to break it down as persons who are professionals, but may not necessarily be in the finance space. So I'm going to bridge that gap and get you to know the things you need to know. So, but I have to emphasize that the tax what I am focusing on is the taxation of individuals, the taxation of income of individuals. Please take note of that, the taxation of income of individuals. So you will want to ask, why am I focusing on this? I think it is a good place to start because nobody jokes with their income. And though other taxes that are raised, other taxes in this new tax act also affect every individual, but it's important for us to look at first how it affects your own income before you even look at how it affects your consumption, your assets, and any other thing. So, okay, now, so this slide is a preamble. I title it New But Not New. So why do I title it like this? I title it so because many people have had misconception about this tax law. Some people feel they are entirely new laws, which are coming to add to the ones we have already been using over the year. But it cannot be so. They are only new to the extent that they were enacted to repeal, please pardon me, that is supposed to be repeal, to repeal and replace the many tax acts that used to govern and regulate taxation in Nigeria. So we will give credit to Mr. Taiwo Oyedele and his tax reforms committee. So you see, this guy has been on the news. He's actually the brain behind this reform. So the aim of having this news, this tax law is to do a kind of overhauling. Let me give an analogy of having a house, a building in a certain location. So it's a kind of, you bring down the building and use the same material to build a building in that same location. So it is it's different from a case where you go and buy a new plot and build a new building entirely, in addition to the one you already have. So that is it in this case. So it is new in the sense that many things have been overhauled. Many things many of the acts have been harmonized and unified and make it more reasonable, more readable, more applicable to our present economic situation. So what are these acts that we are talking about? The first one we have is the Nigeria Tax Act. Please take note of that, the Nigeria Tax Act. So in short, we will call it NTA. So actually this one consolidates over 20 different tax laws, modernizing core tax provisions. So before now, assuming you were if you were just coming from US to establish a business in Nigeria, you would be you will be so burdened with the task of trying to read the different many tax laws, more than 20. I even faced myself when I joined practice initially. So the committee thought it wise to find a way to have it in one single document that will be more user-friendly and more readable and more understandable by the citizens. Now, the next one is the Nigeria Tax Administration Act. So in short, we will be calling it NTAA. So this particular one enhances majorly enhances tax administration by focusing on efficiency, enforcement, and taxpayer education. So it works in unison. All the tax law actually works in unison, but this one works majorly with the Nigeria Tax Act, the first one. So the third one is the Nigeria Revenue Service Act, which is, in short, we'll be calling it NRSA. This one establishes the Nigeria Revenue Service as a body to handle all federal taxes, collection, and management. So this one repealed the former Federal Inland Revenue Service. This was the apex tax body in our country. So starting from first, their name have changed to Nigeria Revenue Service. So which act caused this change? It is the Nigeria Revenue Service. So it is the Nigeria Revenue Service that has made us to start calling that body used to call FIRS. We will now be calling it NRS, that is Nigeria Revenue Service. Please check my channel. The laptop channel. Please, sorry, I needed to check up with something. So the next one is Joint Revenue Board. So Joint Revenue Board is another act. Joint Revenue Board Act, JRBA, facilitate collaboration between federal and state government to harmonize revenue. So this tax act, remember I said earlier, wants to make our economy, make things easier, makes efficiency, wants to bring efficiency in everything. So this last act is supposed to bring in collaboration between the federal revenue service and the state internal revenue service to make them to also work in unison, and also to remove what the chairman of this tax committee calls nuisance tax. If you have been hearing him say nuisance tax, yeah, this is what this is a key mandate of the Joint Revenue Board Act. If I may quickly tell you what nuisance tax is, if you have been traveling on the road, you will see some roadblocks with young boys trying to get some money from the trucks. So it has been found, a study has found out that these taxes are so many and make doing business so lukewarm and burdensome and unnecessary. So this Joint Revenue Board is supposed to work in tandem with the Nigerian Revenue Service and the State Internal Revenue Service. Okay, so now the last thing in this slide is the scope of this presentation, which I had earlier mentioned. Please take note. The scope is taxation of income of individuals, or taxation personal income tax. So that is the scope. Now proceed to the next slide. Okay, taxation of individuals. So or taxation of incomes of individuals. So now I've been mentioning individuals who are individual. I've been mentioning income. So what is income? It is, I know if I want to sample one or two, we will have something to say about income, but I think I should do that. It will be interesting to do that. So can I hear from one or two persons what you would say income is? What do you understand as income?
Okay, we have Joel Perez. I will ask you to unmute so you can speak. Joel Perez, You've been asked to unmute and then speak.
Yeah, income is like when I bust a fat nut.
Okay, you said income is like what? Hello?
Okay, let's have more on that person to try.
Okay, can someone make a trial? Another person. I am actually...
Okay, Gloria again. Gloria again, so you can mute and speak. I've asked you to do so.
Okay, I think that income is the money you receive from a business or a service that you offer.
Okay, that is a fair attempt. I think I'm going to work with that and elaborate on it. So, income, how do we survive as human beings in everyday life? We survive on our income. We receive income. So income is the money or compensation an individual or a business receives in exchange for providing labor, producing goods or services, or investing capital. It is a foundational concept in taxation and forms a common basis for determination of taxes payable by persons. So income is the money or the remuneration. It has many different names. People call it in different environments. So it's that money that comes to you for something you give. There will always likely to be an exchange. So some of us in this call may be working for an employer, they may be working for a company. So they give their labor, their professional, their skilled labor or their unskilled labor, while others will provide goods and they will collect something in return. So that thing you collect in return for what you are giving as labor, producing goods, or giving capital, what we call capital is income. So it is actually the primary basis in taxation in many climates. So other bases can be asset or property, or it can be a consumption. But income is always what the government will always have to look at first. What is this? What are my citizens earning that I can collect and use in doing capital project, giving them roads, giving them good electricity, giving them good water, etc., etc. So that thing that money, that compensation, that salaries, that dividend, that wages, that bonus, that allowances, it has so many names, is what we call income. And it is the foundation, a primary basis in taxation. That is why it is very important that we have to start with it. Because tomorrow, when all of us resume New Year in the office, we will just walk down to the HR office and we will start asking HR question. This new tax act, how will it affect my income, my take-home pay? Will it still be enough for me to take me home, or will it take me to the gate? So you want to know all those things. So that is why it's important that we are having to start this tax webinar with the taxation of the income of individuals. Okay, now, so let us proceed to who the acts refer to as individuals. Who are referred to individuals? Okay, in the context of taxation of individuals here refer to human persons like you and I, who have blood running in their veins, who have eyes, who have ears, not machines. So these persons in employment, it can also refer to a family to families. In this case, the group made up of whether nuclear family or a larger family, it can be referred to as an individual in the sense of taxation of an individual, because sometimes it may be difficult to, sometimes it may warrant that that group can be taxed as an entity, as an individual. So it is this tax the taxation of individual that covers it. Now, the next one is sole proprietorship, self-employed persons, business names or enterprises. One person in the preliminary stage of this call was concerned about how these taxes will affect his business. So yes, this is the core aspects of the new tax laws that will affect your business. So it is covered here. So the next one are partnerships. Partnership is also a business arrangement of more than one person. Okay. It also affects trusts, estate, and a C executor. So the last one is non-resident human persons. Non-resident human person. If you open the tax law, in place of these human persons, you will see individuals in employment or non-resident individuals, but I did not want to use the word individuals again since I'm trying to define it. So now those are what we refer as individuals as it concerns these acts. So now we move on to the next slide. Now, which tax law governs the taxation of individuals? Which tax laws governs the taxation of individuals? Prior to 2026, the taxation of individuals was governed by what we used to call the Personal Income Tax Act, which was first enacted in 1993 and amended in 2011. But effective 1st January 2026, the Nigeria Tax Act and the Nigeria Tax Administration Act repealed and replaced the personal income tax. So you observe first that the Nigerian Tax Act and the Nigerian Tax Administration repealed and replaced before it replaced. It's just like the analogy I was trying to give. You cannot build a new house on top of an existing one. So you have to bring down that old one. So from 2026, we cannot be taxing you again based on the personal income tax. We are now taxing you on the Nigerian Tax Act and the Nigeria Tax Administration Act. So just take note of that. Of course, at the end of this session, I will share these slides and you have it for your own personal reading. So the next one is, which tax authority or body administers the taxation of individuals? So this part of this call is very important. You have to know the tax authority. By tax authority, we mean that body, that entity, that body that will come to that the law has given the mandate to administer, to implement the provisions of those acts. So which tax body? So it is not that straightforward. So that is why I make this table so that I can tell you the tax body. So now, persons, these persons can also be referred to as individuals. So the first column is the person or individual. The next one is the relevant tax authority. That is the tax body that will be in charge of collecting these taxes. So individuals other than officers in the military and foreign military, police, and foreign ministry affairs. So the tax body that will be that is responsible for their taxes will be what we call the SIRS of residents. That SIRS means State Internal Revenue Service of residents. That is where the person is residing. But in the case of FCT is peculiar, since FCT is not technically a state. So it is a body that is created for that, which is called FCTIRS. That FCTIRS means Federal Capital Territory Internal Revenue Service. So these are for the residents of FCT. This is very important because, like that guy who says he's running his business, he may be living in he may be doing the business in Lagos State, and he may want to know, is it supposed to remit to Lagos Internal Revenue Service, or is it supposed to remit to let me say Rivers State Internal Revenue Service? So this is very important for you to know the tax body. So the next one is officers. officers of the Nigerian Army, Navy, Air Force, and police. So the body that is responsible for this is actually the NRS. It was previously called the Federal Inland Revenue Service. The foreign diplomats are accredited to Nigeria. So foreign diplomats, you are a foreign diplomat working in the embassy, you have been posted from your home country to Nigeria to work. So your tax will be, the tax authority that will collect your tax will be the tax authority of your home country. This is because of the understanding Nigeria has with your home country. Now, on the other hand, Nigerian diplomats serving abroad. So Nigerian diplomat working in embassies abroad, in the UK, in the US, it will be the Nigerian Revenue Service, which was previously called the FIRS, that is responsible in collecting their tax. Now, the next one is Nigerians working in embassies and organizations located in Nigeria. So now you are a Nigerian, but you are working in US Embassy. Please, your tax will be administered by the State Internal Revenue Service of your residence. So it won't be the home country tax authority that will be collecting you the tax. Now, the other one is Nigerians without diplomatic status working abroad. So these ones are just persons who have traveled abroad to hustle or for whatever reason, and they having to stay and earn taxable income in that country. They won't have to pay to the Nigerian Revenue Service. They will have to pay to the tax authority in that home country. Now, the last category of people are non-resident individuals. Non-resident individuals, for one reason or the other, their incomes can be taxable in Nigeria. So when it so happens, it will be the Nigerian Revenue Service that will tax those income. So we move over to the next slide, principal place of residence. So you heard me mention residence. Residence is a very serious matter when it comes to taxation of individuals. So what do we mean by principal place of residence? We are going to start first with place of individuals. Place of residence. In taxation of individuals, an individual is liable to tax to the Internal Revenue Service of the state in which they are residing. That is by default, without peculiarities or technicalities. If I am residing in Calabar is the capital is in Cross River State. It will be the Cross River State Revenue Service that is supposed to administer the taxation that is due from me. My personal income tax in particular, to be specific. So now, a place of residence as it concerns individuals refers to a place available for their domestic use in Nigeria or on a relevant day and does not include any hotel, rest house, or other place at which he is temporarily lodging, unless no permanent place is available for his use on that day. So I am actually currently residing in Calabar, Cross River State. But assuming for any reason I happen to travel to, let me say, Lagos to do my work for 2 or 3 days, it will not be deemed that I am resident in Lagos, because when I'm going to Lagos, I will likely take a lodge in a hotel. It's temporarily, so I'll have to come back. So my place of residence will always be where my home is. Where my home is. Please take note of that. Now, sometimes a place of residence of an individual is not sufficient enough to ascertain where they are actually residing. Hence, the concept of principal place of residence. It's very important that we know this. So let us look at what that means. What is a principal place of residence? So in explaining this, I am also using a table to do that. Category of individual, place of residence. So we have individual with only pension as source of earned income. So these individuals, it will be their usual residence. That is their home, those retirees. Now the next set of people. Individual who has income of who have earned income other than pension. So they have earned income. Sooner or later, I'll be talking about what is earned income. So individual who has source of earned income other than pension. So their principal place of residence will be the place nearest to his usual place of work, or the place where the duty is performed. This clause came up when there was issue between the Internal Revenue, the Federal Capital Territory Internal Revenue Service, and the Nasarawa State Internal Revenue Service. Because those of us who are well-traveled will know that some people cannot afford the house rent in Abuja, and there is a certain place because Nasarawa State shares boundary with Abuja. Some people are actually living in Nasarawa State, but they are performing their duty in Abuja or the FCT. So in this case, when these technicalities arise, we will point to that place they normally work, the place they perform their work. Now the next one is individual who has only sources of unearned income. I will also explain what unearned income is. So in such a case, this is the place they usually reside. So again, this is unearned. This is where they place. So if you have unearned income such as dividend, you have dividend, interest, etc. So this will be your principal place of residence. Now the other one, individual who works in the branch office or operational site of a company or other body corporate. So in such a case, the place at which the branch office is or the operational site is situated. So you will see this one agrees with the second one. Okay, now we proceed to the next slide. Incomes that are taxable. So incomes that are taxable. In taxation, the government is interested in all your incomes. So if I am here as a responsible citizen, the government will not only be interested in one aspect of my income, they will always be interested in all of my income, all aspects of my income. So in other words, in my total income or my global incomes. That is the income I earn from many sources. So that is how it works in tax. So these incomes can be earned incomes or they can be unearned incomes. So what are earned incomes and unearned incomes? So I will quickly take that. Earned incomes are incomes derived from activities that relate to an individual's profession, trade, business, vocation, etc., with the person having to actively, I emphasize that word, actively work to generate it. Examples are incomes from your employment, income from your business, those earnings, the profit you make from your business, incomes earned by a professional footballer, because that is what he actually does, honorarium earned as a facilitator in a webinar. You have to exert your professional knowledge facilitating a webinar. You are actively giving out your skills in earning that income. So this is what we call earned income. The key word that is associated with earned income is you are actively earning it, and the skills for instance, you who are health, environmental, and safety professionals, you have some professional certificate or educational certificate that is enabling you to do this work, maybe for the company you are working with. So that company, when they pay you your salaries, that salary is an earned income because you are actively exerting your professional skills to generate that income. Now, unearned income are incomes from passive sources. So unlike earned income, there are incomes from passive sources. You don't have to actively use your skills in earning them. That is money generated from a person's investment. So you can have shares, you can have treasury bills, bond, crypto, etc. All those assets can enable you to be earning income. Even your
your apartment, which you have let out. So that income, when you earn it, it is on earned incomes. They are just by you don't have to exert your professional or technical skill in earning them. They just arise for you. They keep on coming. So also, example, if government have to give some cash palliatives to you, like what was done during the COVID. So such income will also be called unearned income, because you are not really you are not really given something tangible in return for it. So now we proceed to what the law to make a comprehensive list of the incomes that are chargeable or taxable. So here I had to take it right as it is in the Act. So I want to try to list it. So I've been talking about incomes, earned income, and unearned income. So now in this slide, I'm going to be more specific as stated in the law. So the first one there you see is profits or gains from trade, business, profession, or vocation. The other one are royalties, fees, rents, or interest. The next one is dividends, premium, charges, or annuities. So all these are incomes. Fees, dues, allowances, or remuneration for services rendered. Discounts, rebates. Yes, you may ask, yes, this is income too. So sometimes you go to buy something and they give you some discounts in it or rebates. It is a form of income. Now, disposal of money or disposal of money instruments. So sometimes money instruments, you may sell them and get some income. That proceeds, the proceeds you get are also your income. Prizes, winnings, honoraria, grants, awards, laurels, etc. So you may be an athlete and you ran and won a distance race, and you are given a cash prize apart from the award, apart from the medal that you are given. So this is also an income. Winnings, for instance, bed Niger and whatever, it is also an income to you. So the other one is employment income, which this one doesn't need to be overflowed. So all employment income, the major one you will be familiar is salaries and wages, but it may interest you to know that all those allowances, housing allowance, wardrobe allowance, transport allowance, punctuality allowance, bonuses, rewards, benefit in kind. BIK means benefit in kind. Benefit in kind is a kind of income you earn. They don't actually have to give you cash, but they give you some benefits which you could have had to incur by yourself. For instance, when the company pays a driver for you to serve you and your family, in such a case, that salary that is paid to that driver becomes an income to you. So that is what we call benefit in kind. We also have profit from digital or virtual transactions, gains on disposal of assets, okay, etc. So this list is not actually exhaustive. When once the law defines that there is something that you are earning and it brings incomes to you, it brings money to you, maybe monthly or irregular basis, whether monthly, yearly, daily, they will say it is an income. So why that etc. comes is because you may have heard some time ago, Mr. Taiwo Oyedele had said that even runs girl in inverted commas will be taxed. So what makes it so is because the law has given a window. It has made this list not to be exhaustive if you go to the act itself. So immediately the law descends that you are earning something that is an income, the law will come in. So we proceed to the next slide. The following are incomes exempted from tax. So sometimes too, the government looks at you and pity you and say, even though you are earning income, let not all this income be taxable. So the government, in its wisdom, exempt this income from taxes. So the first one on the list here is pension, gratuity, or any retirement benefits granted in accordance with the Pension Reform Act. Take note of that, in accordance with the Pension Reform Act. So you may be a retiree in this call, and you are receiving pension every month. So it's good news for you that to know that that income you are earning, that pension you are getting every month, will not be taxed. Will not be taxed. Now, I highlighted that pension because you may have seen pension earlier on when we were talking about place of the principal residence. So now, in that context, the law, because when I was researching for this presentation, I talked with some persons who were actually pivotal in the creation of this law, these tax new laws. I say, if you are exempting pension from taxation of individuals, why do you have it again in that table when you are trying to define a place of primary residence? So in response, they told me that if that person who is earning pension and other incomes that are taxable, for instance, Dangote now, if he retires and he's earning, he retires and he's earning income, but he's also, and he's earning pension, you know that pension will not be taxed. But when he receives shares and management fees from his companies, or dividends and management fees and rents from his buildings, etc. So those other incomes are taxable. So in such a case, they will, when they want to ascertain his place of primary assignment, they will have to look at where he is residing. But generally, please just take home that pension gratuity, the lump sum you receive, is not taxable in this new tax act. Please take note of that. But there is a condition tied to it. It must be a pension or gratuity or that is in accordance with the Pension Reform Act. So later on, as we proceed, I'm going to elaborate more on the Pension Reform Act as it concerns these tax laws. Okay, the next one is wound and disability pension granted to members of the armed forces or recognized national defense organization or person injured as a result of enemy action. This one is self-explanatory. The next one is sum received by way of death gratuities, redundancy lump sum, or any compensation for loss of employment. So the company wants to do that severance pay. They want to do downsizing. I think in the contemporary term now is right sizing. When they want to do right sizing, and they will now pay some person some compensation, some payment, redundancy payment. That lump sum you collect, it is not tangible, it is not taxable. So it is on compassionate ground. You can understand that. Income earned from state or federal government bonds. So income. So when federal government give bonds, so those coupons and interests that arise from those instruments are not taxable. They are exempted. So it can be understood now, because it is government that need this bond. So why should they tax it? So that should be understood. Now the next one is emolument of any person serving in hazardous areas. Okay. Now the next one is dividends received from investment wholly exported in wholly exported oriented businesses. So I remember that companies that are operating in the free trade zone, who are supposed to do not actually pay taxes on their on the income they earn from their exported product. But take note of the adjective, the verb and the adjective there. Wholly exported oriented business. So if the company discover that even though you are operating in a free trade zone, but your items are being sold in within the country, within Nigeria, that is excise region. So that income you are earning from selling those items will actually be taxable. So the dividend earned from that operation arm of your business will be traced and taxed. Now the next one is income of persons who earn minimum wage. I think this one has really made the news. So what is the current minimum wage? The current national minimum wage is 70,000 naira. So once you are earning that income, you are completely out of it. So the next one is wages and salaries of military officers. So military officers do not, their wages, they are what they collect in serving our country, putting their life on the line, is completely exempted from tax. So these are all very important because you may have relatives, you may have church members who fall under this category. So you should know very well that these incomes are exempted. These tax laws are exempted from personal income tax. So the next slide, employment income. So now we want to focus our limelight on employment income. Employment income. The income from employment is derived from Nigeria, where the employer is a resident of Nigeria, or the duties of the employment are wholly or partly performed in Nigeria. And the remuneration is paid by or on behalf of an employer who is a resident of Nigeria, or the remuneration is done by a Nigerian fixed base of an employer, or not liable to tax in the employee's country of residence. I'm just re-emphasizing what we learned in that table. Now, the employment income of a non-resident employee. A non-resident employee is an employee who don't actually physically reside in Nigeria. So the employment income of a non-resident employee shall not be taxed in Nigeria, where the employer is a startup or is engaged in technology-driven services or creative arts. And also the employment income is already taxable in the employee's country of residence. So take note. And take note of this startup, because you cannot say a company of a technology-driven company like Google or Facebook or Instagram or the etc. is that they are not startups. So those ones have been around. So they are not their employment, the income or the income of non-resident employees earning that they are earning. The income of non-resident employees working for these companies outside there but traced to Nigeria is actually taxable. Okay, but there is technicalities in this. It is not that straitjacket. Other aspects of the law will have to be confirmed to ensure that it aligns. Please, thank you. Now the next one is pay as you earn. So the next slide is pay as you earn. This pay as you earn is actually a system of taxing employment income. It is peculiar to taxation of employment, and many persons who are on these calls who are working for companies, I think what they will likely be familiar with pay as you earn, that is payee. So what they didn't know is that payee is actually an aspect of employment income. So that payee system, in the payee system, the employer is mandated by the relevant tax authority to deduct, the employer is mandated by the deduction of tax at source regulation. So there is a regulation that is called deduction of tax at source regulation, which is normally issued by the Minister of Finance, as the statutory agents responsible for the calculation, deduction, and remittance of the income taxes of their employees. Take note of their employees to the appropriate state tax authority, not later than 10 days following the month of salaries payment. So before now, you are an employee working in a company, and every day you are receiving your alerts. That alert you are receiving is actually what we call net pay. Before you receive that net pay, some things have been deducted, and one of them is payee. So that payee is deducted because your employer has a statutory obligation to be doing that every month and remitting to your government. So they will not only deduct arbitrarily, they will deduct according to the personal income tax rules. So they will bear the burden of employing a professional accountant to be doing these calculations. They will do the deduction and remit it to the government not later than 10 days following the month of payments. So that is what the law demands on it. So apart from making that remittance, they are expected to file a return with the relevant tax authority for all the emolument paid to their employees, not later than 31st January of each year, in respect of all incomes, all employees in its employment in the preceding year. So at the end of the year, the employer will collect, make a roll call of all the employees that have been working, will state what was their total incomes, all their allowable deductions, and their taxable income, and then what was eventually taxed. It will do it in a prescribed form and file it not later than 31st January of each year. So the one of for the 2025 year, financial year, that is from January to December 2025, is going to be done. All employees will ensure you will see your HR will be running upside and up and down, trying to liaise with the finance department. So they will have to ensure that all the documentation are okay, and they will do this filing. So that is because the law mandates them to do so. Now, now we want to move to talk about a concept in employment income, which is called gross income. Gross income is actually the income of an employer. The gross income of an employee is the sum of basic pay, housing allowance, transport allowance, and other allowances, overtime, bonuses, 18-month salary, benefit in kind, etc. So all gross income is a terminology in employment income, which refers to a summation of all the employment incomes that are taxable. So normally, so the total of it, so sometimes one can be talking of gross income of an employer rather than beginning to mention what makes them up, which is basic pay, housing. So take note of this term because we are going to deal it when we want to look at a case, when we are going to look at a case study, which is going to be done sooner or later. Okay, it is important to also mention here that that gross income does not include reimbursements or refunds and redundancy payments. So what does reimbursement mean? For instance, you are employment for XYZ company in Lagos, and you are posted, you have been sent on assignment to Akure to do some assignment for 3 days. So when you stay there, you lodge in a hotel and have to feed yourself. So that after you incur those expenses, you pay for hotel and transportation and all and feeding. So when you come back to your base, which is Lagos, your company now refund that money to you. They now reimburse you. So please take note that money is not taxable because it is a refund. It is a refund. You were not the one that you have to spend that money for the benefit of the company. So there are other scenarios that can arise where you have to spend money. Spend money on behalf of the government, on behalf of your employer. So such refunds are not taxable. I had already talked about redundancy payments. So redundancy payments are not taxable. Why I have to mention this? Because sometimes your employer can make the mistake of paying this, lumping it up with your gross income, that is your basic income, housing allowance, etc., I'm paying you. This is not really ideal. This is not really, because it normally causes confusion. So, but if you know your rights, if you find out that it was taxed, you can call the attention of your employer and they will do the needful. So we move over to the next slide. Now, the next slide is profits from business, profession, or vocation. Let me get you to see the full heading of the slide. Profit from business, trade, profession, or vocation. So we have talked extensively on profit from employment. Income from employment or employment income. So some people, some individuals, instead of working as employees and earn employment income, they rather establish their own business or trade or vocation or profession and earn profits. It would also be a crime if I say and earn income, but in this case, we would tend to use the word profit. When it comes to business, trade, profession, or vocation, it is more appropriate to use the word profit. Yes, profit, it is deliberate. So why are we saying profit? Profit, because profit, you cannot begin to tax a business person. Someone who owns you cannot tax his entire income like that, his gross income like that, because there are some expenses that were incurred in earning those incomes. So when you deduct those expenses, so what is left is profit. That is why in this case, when it comes to business profit or trade profit or profession or vocation profit, incomes, we tend to use the word profit. Profit is more permissible in this scenario. So now, yes, I've been mentioning the word profit, and it was striking on your brain when you were in primary school. You were told that profit is calculated as income minus expenses, or sales minus expenses, or revenue minus expenses, whatever term. So that profit is always something that remains after something is deducted from the total income. So in taxation, it is no different. So something is still deducted before we arrive at profit when it comes to taxation. So the taxman is very understandable and intelligent. He knows that you have incurred expenses or costs. So those expenses have to be taken out, and the remaining one, that profit, so that profit will now be taxed. So, but take note that this is associated with people who are in business, with individuals who are in business or trade or profession of their own. So they are different from those in employment. The people in employment will have to wait till the end of the month, and when they get their alert, they can find themselves and say they are earning income. But these people into business, they are collecting their money every second, every hour. Their alert is entering their phone. They are making money. So their income will also be taxed because they are also citizens. Now, the taxman does not, on the face of it, allow all expenses. He won't just come and say, these are all my expenses, and the taxman will accept. So that is why the taxman now, instead of saying expenses, the taxman will say allowable expenses or deductible expenses. Deductible expenses or allowable expenses. This is very interesting. So the taxman will have to allow those expenses must be in a manner that it is allowable or deductible. So let us talk more about this. Now, what are allowable or deductible expenses? These are expenses wholly and exclusively incurred in the production of incomes made by a business, trade, profession, or vocation. Section 20 of the Nigerian Tax Act. That is how it defines it. So the key word is wholly and exclusively. The following, so the taxman even go further in the law to list to list these incomes. Remember, we had listed that one was on a general level, but now expenses. We had listed expense. Okay, sorry, that one was incomes. We listed incomes before now. So now we want to talk about list expenses as allowed by the taxman. The following expenses are allowable in determining taxable profits of a business, trade, profession, or trade. So these are interest on loans. So a business person has collected a loan or capital, debts, has gotten a loan or debt capital, as we sometimes call it in finance. So that interest that accumulates in that loan is actually allowable by the taxman. Rent or premiums on property. So that rent you pay in the shop, for the shop or the building, or even royalties for extracting those assets, items used in production. So these are also allowable. So the next one are salaries, wages, and other remuneration or benefits. Now we are coming across the word salary, wages again, but please let us not confuse it, as it has to do with employment income. This one is actually an expense. In this sense, it is an expense to the business person, to that individual running a business, to that enterprise, to that business. Please take note, I'm careful, I'm using the word that enterprise, that business name, that's an employed person. Please, I am careful to use that word. I am not using the word company. Please take note, it is deliberate. Please. So these salaries, wages are actually paid every month by that business person. So the taxman will also allow it for when he wants to arrive at your income, or at your profits, rather. Now, what are, let me continue. This is just a continue. The other one are repairs of property and equipment, research and development, bad debts. So what are bad debts? Bad debts are debts that are irrecoverable. You have exhausted your effort in collecting these debts, but it's not working. So, but there is a condition, there is a clause. Such bad debts must not be connected to a related party, and it must be satisfactorily proven to the tax man. So you must satisfactorily prove to the tax man. So here you see that the law gives the tax man some power to say that some debts are bad and not bad. I think some people may find this to be arbitrary, but that is what it is. And also, this debt must not be connected to a related party. A related party is, for instance, I sell a provision shop, and my wife come and say she's buying 3 packs of Indomie from me, that she will pay me back in 3 days. So 3 days turn to 1 month, 1 month turn to 1 year, 1 year turns to 3 years. So she's not paying me back. I cannot come and write off this date as a bad date, because my wife is a related party. My wife is related to me, is very connected to the business. It's almost inseparable. So in other instances, it can be a partner. So a partner, 2 partners are doing business, and the business gives the other partner some goods on credit. So for that if the partner is not paying, you cannot, the taxman will not allow you to write off that debt, please. The next one is inventory loss satisfactorily proven to the taxman. So of course, this happens in business. You buy 50 cartons of Indomie, and in your shop, maybe rats destroy it or water destroy it. So when this happens, that loss, that inventory loss, the value, you have to satisfactorily prove to the taxman. And if you do that, it's going to allow it as an expense in computation of your profit. Now, the next one is pre-operation expenses incurred not earlier than 6 years. So there's a clause. So now, what are pre-operation expenses? I incorporate a business name with CAC in January. I actually commenced the business in March. So all the expenses that I have incurred, I have been incurring from January to January and February, which has to do with that business. All that expenses, but remember this business has not started to earn income. It has not started to make money, to earn income. But I am already incurring, for instance, I pay a lawyer to run around for me. I pay an agent to look for the shop. So the total of that expenses is what we call pre-operation expenses. So the tax man will allow you to write to deduct it from your income in deriving profit. But there is a clause: it must not be earlier than 6 years. 6 years. Okay. Now, contribution to any staff pension, provident, or other retirement benefit funds, that society or scheme approved under the Pension Reform Act. Now again, we meet the Pension Reform Act. So if you are a business owner, a business person, and apart from the salary you pay your staff, you decide to be doing pension contribution. Remember, like in the Pension Reform Act, the employee contributes 8%, and you contribute 10%. If that 10% you are contributing, it will be allowed for you to deduct in deriving profit. The taxman will allow it. So that is what we are talking about here. Now the last paragraph in this slide is emphasizing again that profit made by a business incorporated as a company are not within the purview of taxation of individuals. So again, when I am talking about business, trade, profession, or vocation, I am talking about it as it has to do with a human being. Sorry, as it has to do with an individual. I am not talking about as it has to do with a company, an entity incorporated as a company. So please take note of that. Though there are similarities, but this will be treated entirely separately. Okay, we move on to the next slide. Now, Section 21. Section 21 of the NTA outlined the following as non-allowable or non-deductible expenses. So the law has given us further guidance on what they say that are not deductible. So they now come out to tell us, please take note, these ones are not deductible. So they are emphasizing it again. Now, examples are capital withdrawn or repaid. So you own a business. In January, you invested 20 million in that business. And for whatever reason, you had to withdraw, let me say, 5 million for your own personal use. So that capital you are withdrawing is not an allowable expense. Please take note. The next one is expenditure of a capital nature. Yes, you buy an equipment of, let me say, 20 or 5 million or 1 million or 3 million, or it might be a land or a building. This is what we call, this involves a capital outlay. It is called capital expenditure. So it is not actually allowable to be deducted at once in 1 year. That is what the law is trying to talk about. We are going, but there is a remedy for this. We are going to look at that later. And that remedy is called capital allowance. It is actually given in place of depreciation, what you, a businessman, will call depreciation. So the next one is domestic or private expenses. So this one, you own a shop. You own a shop, you are running that shop, and you remove 20,000 and pay your child, you pay your child school fees, 20,000 naira. Please, the law will not accept it. That is your private expenses. Please, or you remove 20,000 and pay for family affairs. Maybe you want to give your younger brother in the village some money, dash him some money. So you remove it. So that is a private. That does not have to do with you earning income for that business. So it is not allowable. Now, the next one is amount recoverable under any insurance scheme. So you insure your car, which you use in your business. So your car caused some damage, and you are expected to pay for that damage. You take money and pay for that damage. But you have insured that car that in such eventuality that you will be reimbursed, you will be compensated. So in other words, that your car has an insurance policy, is under an insurance scheme, that amount is going to be recovered. So you cannot write off that amount. You cannot write it off on your profit. You cannot use it to reduce your taxable income. It is not allowed. So the next one is depreciation. Depreciation is actually is actually one expense business people take recognize, but it is not recognized in taxation. But anyway, there is a remedy. We are going to talk about that later. Now, the next one is any sum payable to a related party not consistent with the transfer pricing regulations issued by the service. So any money you pay to a related party, a related party in this sense of taxation of individuals can be your partner. It can be that is a co-owner of a partner. It can be maybe your wife. So if it is inconsistent with the transfer pricing regulations, which is normally issued by the service or under the supervision of the Minister of Finance, it won't be allowed. Okay, now we proceed. Now the law is going further. Penalty or fine under any law. So you break a traffic law, then your vehicle, which you are into distribution business and you have a motor vehicle, that truck now breaks a traffic law. That penalty, the traffic warden is going to charge you is not allowed expenses. So any fine, anything that has to do with fine or penalty, or even you pay your tax late and they charge you a fine, you cannot even use it to deduct, to reduce your taxable income. So anything, penalty or fine, is not allowable. The reason is clear, because the tax authority don't want to encourage lawlessness, unruly behavior. So the next one is tax or penalty borne on behalf of another person. So this one is still you have to pay a tax or penalty of another person. For instance, okay, recently I have seen on social media people creating some memes saying that from next year you will start hearing things from your spouse that says, honey, please can you help me and pay my tax? So if I am running my provision business and I make money from that business, and my wife come and say, please, oh, my wife also have another business, and the tax authority gave him a tax liability, a tax bill. So if I remove my money from my business and pay for our own, it will not, in my own business, it will not be seen, it will not be allowed. It will not be allowed as it will not be seen as an allowed. The tax authority will not allow that expense. Or assuming I remove money and or my girlfriend comes to meet me and say, pay my tax for me, as you are seeing it trending on the social media. This will not be allowed. So I'm just telling you ahead. It is clearly stated in the tax law. Now, another one is any expense allowable as a deduction in determining chargeable gains. So chargeable gains are actually a situation where you have to dispose a capital, a fixed asset, what we call a fixed asset. So you bought that fixed asset 3 years ago, 5 million, and without considering capital allowance, you now sell that asset, let me say 4 million. So there is what we call a chargeable gain. So there is a gain of 1 million, 4 minus 3. So that 1 million is what we call chargeable gains. There is this chargeable gains is an aspect of taxation that is very broad, which maybe in another occasion we have to talk about it. So expenses associated, because the law also actually allows some expenses associated in disposal of an asset which earn a chargeable gain. So the law doesn't allow you to again come and expense it in deriving your profit. Now the next one is expense incurred in deriving an exempted income. So we talk about exempted incomes before now. So examples are we talked about, we gave a complete, we mentioned many of them: pension, pension, gratuity. So, for instance, you incur some expense in getting this. Anyway, though this does not really it's not really peculiar to a business. But for instance, I'm just giving an instance. If you incur any expense in getting that, let me use the case of gratuity, because that is the one that is lump sum and is lump sum. So if you had incurred, so this will not be accepted for you to use in deriving your profit, your business profit. Okay, this last two, I had to highlight it for emphasis. Please, I've been talking for so long. I just want to confirm that all of us are still on the call. Please just raise your hand if you are still following, please. I just want to ensure that I'm not talking to myself. Can someone say something? Good. That's what I wanted to confirm. Thank you. So I can proceed now. So vatable expenses. This last two never used to be. It never used to be in Personal Income Tax Act, the old one that was appealed. So these two are very important because the law is now very serious about VAT. So there are some expenses that you incur in business which are vatable. So if it is discovered that when at the time of you incurring those expenses, you didn't pay for VAT, those expenses will be disallowed. I think this is going to put many businesses in trouble because this one is very blanket. Once it is discovered that an expense item was not VATed, whereas it was supposed to be VATed when the invoice, when the payment was made, it was not going to be allowed. So it is a very serious that all business enterprises has to take note of. Now the same one is applicable to import duty or levy. So if you buy, let me say, an equipment from China, because it is China that are really giving us equipment. So that equipment was supposed to suffer import duty, and it wasn't paid. So you will not be able to, assuming you are into selling of this equipment, the cost of that equipment, you won't be able to write it. You won't be able to. The customer will not allow you to treat it as an expense. It will not allow because you didn't pay for import duty. So what is the goal? What is the government trying to achieve? They want to, you heard that one of the objectives of this net was to cover the tax net, to close the many open tax nets. So they want to ensure that at every point in time, VAT are collected, because VAT is a different type of tax entirely. Tax is based on consumption and not on income. It's based on consumption. So a tax man is using one stone to kill two birds. He wants to ensure that that business are now conscious to always demand, to always do business with entities, with other business that are VAT accountable. So that is what they are trying to achieve. The same thing with import duty. And this is going to cause a lot. Many people are not aware of these last two expenses, non-allowable expenses. This is going to be a real game changer, because a tax man will just come. Instead of him he will start with this. So first, once he looks that, he sees that the expenses you are using in computing your profit were not vetted. It will just, every other story, every other test you're supposed to do, you will not even bother on it. So please, if you are running a business, if you are earning your income from business rather than from employment, take note of this. Okay. Now, how do we, now we want to go into how the computations are done. How are income derived? How are income derived? How do we derive a certain total income of an individual? So take note, in talking about this, I am now talking about the total income of, when I say total income, I'm talking about both employment income and income from business. Or I'm talking about both earned income and unearned income. That is the total income, your global income. So there is a structure, there is a build up, there is how it is built up according to the tax laws. So we try to follow it when we want to do the computation. So the total income of an individual in any year of assessment is the taxable income minus total deduction. So taxable income is the aggregate of assessable profit from trade, business, profession, or vocation. So that is, in other words, they are your profit from the last thing we just treated. Now the next one is your employment income. And the next one is income from investment, such as dividend, interest, coupon, rent. The next one is profit or income from any other source. This any other source is deliberate. Remember, I was saying that the law has given a window, etc., to when it comes to the listing, trying to he is giving a window where in a case where they see that money are coming into your account and you cannot really say, they cannot really determine that it is earned income or unearned income, but your money is coming into your account. So, and they are not exempted income. So in such a case, they will take it as income. So that is if you are not able to defend it. So the next one is chargeable gains. I had talked about chargeable gains earlier on. So the aggregation of this. So take note, your total income is not just income from your employment or profit from your business. It's a summation of everything, earned income and unearned income. So in deriving your total income, in deriving total income, some deductions are also normally recognized. Pardon me. What are those deductions? Any loss, ascertain, capital allowance. Yes, remember I told you that there is something called capital allowance. It is always given in place of depreciation. So depreciation is always done based on accounting rules, but capital allowance is done based on the taxman's rules. So this is a deduction when you are trying to derive taxable income. Now, exempted income. So you also take note of all incomes that have been exempted as stated in the law, and deductions at source. This one hardly applied to income of any individual, though in some rare cases it does. It actually, another name for it is called withholding tax, and it is a separate discussion on its own because it's quite broad. Okay, now we proceed to the next slide. The next slide is a settlement of what we call, please pardon me, let me see the heading, chargeable income. Chargeable income. So all these terminologies are developed when we want to do tax computation, which we are going to demonstrate in this session. So what are chargeable income? how do we derive that? So chargeable income is actually is derived by subtracting eligible deductions from total incomes. So now the question arises again, what are eligible deductions? Individuals' contributions under National Housing Fund, individuals' contribution under National Health Insurance Scheme, individual contribution to a pension scheme in accordance with the Pension Reform Act, interest on loans for developing or owner-occupied residential house, life assurance premium on self or spouse, rent relief of 20%, annual rent paid, subject to maximum of 500,000, whichever is lower. This last item has been trending very well. It has been trending because the law now gives that opportunity for you to utilize give you a relief on your rent when they want to charge you your personal income tax. But there is some technicality in it. So it is the lower of 20% of what you are paying as annual rent, or 500,000. In other words, you cannot claim this relief above 500,000 naira. So all these aspects of the law are a little bit technical and always will involve a professional. So rates of tax. Now, these are the rates. When it comes to personal income tax, to taxation of individual, it is not just a blanket rate that is used. It is not just a blanket rate that is applied on your chargeable income. No, it's not like VAT. Everybody knows that VAT is 7.5%. It's a very simple thing to compute. But in the taxation of individual, the rate is a little bit technical. So this rate is a tabulated rate where you are going to apply it gradually. So you are going to take out the first 800,000, which will be taxed at 0%. In other words, all your incomes from 1 naira to 800,000 will be taxed at 0%. And of course, you agree with me, your minimum, if those earning minimum wage will fall under this ban. So now, assuming you still earn additional income after this 800,000, that additional one will be charged at 15%. Assuming you still earn more above this 800 plus 2.2 million, that will be taxed at 18%. Assuming you still go further to earn more above this 9 million, 2.2 million and 800,000, that one will be taxed at 21%. Assuming you are still a big boy, you are still chilling with the big boys, earning big money. So that next part of the income will be charged at 23%. You are not giving up, you are still making the money. So that additional surplus earnings you are earning on top of a summation of 800,000, 2.2, 9 million, 18 million, and 25 million. So that additional one will be taxed at 25%. That is where it stops. So it will be taxed at 25%. So this aspect of it can be very confusing, because I remember there was a time Mr. Taiwo Oyedele he was compelled, he has to come out and debunk some many false computations that was going around in the social media because they misapplied these tax rates. So, but I'm going to demonstrate it to you, because the beauty of this station would be to show you how it is done, though it is still advisable that when you want to do it, you can still consult a professional. But at the end of the day, you will have this slide. I will even share an Excel sheet with you, which will help you further. So without much ado, we are going to share a case illustration where we are going to do some computation. We are going to apply all that I've been saying from slide 1 to slide 21. So sorry, from slide 3. So from slide 3, sorry, slide 3 was a preamble. From slide 4, so all of it That is
Sorry, Mr. Edward, is it possible to stop sharing and reshare again? And someone is messing up with the whiteboard and we are not able to see the slides clearly. You
okay,
can
no
stop
problem.
sharing and share again. Okay, sir.
Okay, I'm doing that right away. Okay. I'll stop sharing.
Yes, okay, so you can try share again.
Okay, sir. Okay, confirm that you can see. Please, those on the call, please confirm that you can see.
It's coming up.
Okay.
Right.
Meanwhile, I know in the course of taking my slides, questions have arisen in your mind, apart from the initial ones that we asked, which we are going to address. So begin to drop them on the chat. Mr. Isaka will do well to read them for me. But please, I want to emphasize, let the question border around taxation of income of individuals or personal income tax Not if they are not on personal income tax, I may not respond to them. I will give precedence, priority to the ones that has to do with personal income tax. So ask them as many as possible as to ask them and get all the clarification you can get. So I can now go back to share my slides. So please make sure you ask your questions. We have talked about taxation of individual principal, place of residence, incomes that are taxable, incomes exempted, employment income, payee, profit from business, trade, profession, or vocation. Now, we talk about how to ascertain total income and rates of tax of individuals. Now, ascertainment of chargeable income of individual, we also talk about it. So now we want to look at case illustrations. That is slide 23. So there is I need someone to read this case for me. Please, I need someone to read it out. Let me just take some water. Just read it like it is a case. We want to bring it alive. We want to see the tax implication of this case. So please, I need someone to read it for me. It has to do with, anyway, after reading it, we will know what it has to do with. The aspect of the taxation of individual it has to do with. Please. Someone other than Mr. Isaka, please. Can someone else, perhaps a lady?
Okay, we always have a Gloria's hand, or let's see if we can have another lady. Do we have another lady? Just raise your hand, I will meet you to speak. If not, Gloria, you can raise your hand again and I will meet you to speak. Okay. Okay, I've asked you to unmute. You can now unmute and speak.
Okay. Can you see clearly?
Yes, I can.
Okay, good. Go ahead.
Case illustration number 2. Mr. Sabinus retired from his role as the...
Hello, sorry to interrupt, please, sorry. It's supposed to be number 1. Number 1, please.
Okay, case illustration. Usavi Romanus Okam is an HSE manager in Sigma Industries Limited with headquarters in Lagos, Nigeria. He lives and works in Ughelli, overseeing the company's HSE affairs in the Ughelli branch of the company, even though his family lives in Port Harcourt. His annual rent in his Ughelli's apartment is 400,000 naira. The following are his salary details in the company for the month of January 2026. Basic pay, 350,000 naira. Housing allowance, 150,000 naira. Transport allowance, 50,000 naira. Overtime, 60,000 naira. Sorry, I can't see the screen again.
Please pardon me.
Okay. All right. Overtime is 60,000 naira. Incentive for meeting monthly HSE targets is 80,000 naira. Sigma Industries Limited runs a pension scheme for all his employees, which is in accordance with the Pension Reforms Act calculate the payee tax of Mr. Okam for the month of January 2026.
Thank you very much, Gloria. So at this point, we are going to demonstrate, bring into life all that I have been explaining so far about taxation of the incomes of individuals. So in this case, we are going to see, try to see the tax implications of all the incomes of Mr. Xavier Romanos Okam. So while reading it, if you are, for those of us who were paying attention, you will find out that this is likely a case of income from employment. Please, if you agree with me, just do thumbs up. Thank you, thank you, thank you. So we are going to bring it alive. We are going to try to discuss the implication, the implication and of this is earnings and how it affects his income tax. So, but already the case has stated that we have to calculate payee, but we are going to do other discussion. It's going to be interesting. It's going to be interactive. So now, at this point in time, I want to say that Mr. Xavier Romanos is a case has to do with his income from employment. Hence, the law obligates his employer. Who is his employer in this case? Please, can you mention? Can someone mention them?
Let's have someone to either put it on the chat box or raise your hand. I will ask you to unmute and speak. Okay. Mabel, you've been asked to unmute and speak. You can now speak.
Okay, the employer is Sigma Industries Limited.
Exactly, thank you. I've been following very well. So in this case, the employer has the obligation to deduct his salary at source. So he's going to calculate it and deduct it at source. So you may be a business person. You may have a business name. You may have incorporated a business name. In such a case, your income, you are doing business. So you are an employer. So you employ somebody. So you employ somebody like Mr. Romano. So in such a case, you have that obligation to be deducting at source his income. I don't know, it was an oversight that I made this a limited. Okay, anyway, it's still okay. It's still okay. It's still okay since the subject matter, who is Mr. Romanos, is an individual. So but in your own case, it may be a business name. It may not be a limited liability company. So you will see how we treat this case, and you will learn how it is done. So I'm going to open an Excel file and start to show you how this is built up. Can you see an Excel file? Please confirm. Mr. Banum, confirm, please.
Yes, I can see it, sir.
Okay. Okay, now, so we are going to calculate first, what we call the gross income. We had talked just some few minutes ago, we have talked about gross income. So we are going to calculate the gross income of Mr. Okam in January 2026 for his employment in Sigma Industries Limited. So what I'm going to do is a manual computation. But when we are done, there is an online calculator, which I'm going to share with you. I think I should even share with you now, so that, because I know you may not want to, you may not want to disclose your income like that. You may want to calculate it yourself before you even meet your HR tomorrow. I know first thing tomorrow morning, many people will be visiting the HR tomorrow because of their salary. So I want to copy that calculator and drop in the chat. So later on, when we do it manually, you will try to also see, you use your own peculiar case and see how you can get the same answer. Okay. Okay, so you have it there. So, but first, so in doing this computation, it is a build. It is done gradually. So first, we are going to ascertain what we call gross income. Remember, I had talked about what gross income is made up of. Gross income are all the income that are earned by the employer in that company. That is, in the case of employment income, all the income, all the basic pay, all the allowances, the bonuses, the overtime, the benefit in kind, everything. So in the case of Mr. Ukam, so we have basic pay. So please, you confirm that the basic pay there was 350,000, right? The housing allowance was that much. The transport allowance was that much. The overtime allowance was that much. The incentive was that much. So the total of this, if I open my Excel formula, you will see that is a total 690,000. But this is for 1 month. Take note. That is for 1 month. If we want to get it for 1 year, we will multiply it by 12. So if you see the Excel formula, I believe you can see the formula bar. Please, you can see the formula bar. You will see that it is multiplied by 12 for us to get for the year. So that is his total, that is his gross income. From employment, take note from employment, take note from his employment in Sigma Industries Limited. So the next one is his pension contribution. So his pension contribution is now, remember, it was emphasized that the company runs a pension scheme which is in accordance with the Pension Reforms Act. So now I want to take this opportunity to give you a glimpse of what the Pensions Reform Act is about, what they stipulate. So the Pensions Reforms Act, one of their provision is that what the employee will be contributing will have to be 8% of their basic pay, their housing allowance, and their transport. Please take note of that. So that is what one of the provisions. So it is not the Pension Reform Act does not look at their gross income. Please take note of that. It does not look at their gross income. It only takes, the Pension Reforms Act only takes 8% of basic pay, housing allowance, and transport. So if your company is doing 7.5 or 6%, it may not be allowed because it is not in accordance with the provisions of the Pensions Reforms Act. So in this case, you can see we pick the basic pay, the housing allowance, and the transport allowance. The total here, as confirmed in that formula, is 550,000. But take note, it is for 1 month. So for us to gross it up to 1 year, we multiply it by 12, and you can see, so we have 606,600,000. So now, when we apply 8%, to it, we will now have 528,000 naira. This is, but take note, it is for 1 year because this 8% is based on the figure we derive for 12 months and not on 1 year. Good. Now, the next one is, but let me pause here and try to explain why I am grossing everything to 1 year. That is 12 months. Why I am doing that is because the table, this rate of table is, everything here is per annum. This rate, these figures we are saying here has to do with per annum. Please take note of that. It has to do with per annum. That is why I am grossing everything to 12 months. But what we will eventually arrive on is going to be for 1 month. Please take note of that. So now we proceed. Now, number 3, the rent allowance. Remember, this guy has a rent. I mean, he rents a house in in two places. Am I correct? In Ughelli and in Port Harcourt, where his family reside in Port Harcourt. But the one that is going to be used is the one that is in Ughelli. Why are we doing that? We are trying to obey the rules of place of residence, principal place of residence. We are going to talk more about this later. So 8% of it, and again, remember that 400,000 was an annual figure. It was not a monthly figure. So 400,000. So 20% of this is 80,000. So now I have 80,000. So remember when we were talking about this rent relief, there was a clause. So it says subject to a maximum of 500,000, whichever is lower, 20% of annual rent paid, or subject to a maximum of 500,000, whichever is lower. So if I may ask us, which figure are we going to take? Are we going to take the answer that we have, or are we going to take 500,000 naira? Can someone speak up?
So you can raise your hand. I will unmute you and ask you to unmute and you speak. Or you can drop your response in the chat box.
And I also want to add that at the end of the day, I'm going to share this Excel sheet with you, free of charge, all the formulas. And I'm also going to, I've already shared the online calculator with you. So you have so many resources as a byproduct of this. It's not even a byproduct, as the main product of this webinar at your disposal. So can someone tell me which figure are we going to take?
Okay, we don't have any chats, any comments in the chat box or hands raised. So I think you can just mention it so we can move ahead.
Okay, let me move ahead, but I will still explain with more clarity. We are picking 80,000. We will be picking 80,000. Why are we picking 80,000 naira? Because 80,000 is lower than 500,000. In a case where this employee's rent was, let me say, 6 million naira, those big people who are living in Ikoyi and Lekki. So 20% of 6 million naira would have been how much? 20%, 0.2 of that would have been 1.2 million. So in such a case, we wouldn't have picked 1.2 million. We would have to pick 500,000 because 500,000 is lower than 1.2 million. Please. So that is the rules that govern that rent relief. Okay, so that is it. So I can proceed. Now monthly payee tax. So now it is now time to apply the monthly it's now time to get the monthly payee tax. So in getting the monthly payee tax, we are now going to take away eligible deductions from the gross income. From the gross income. So what was his gross income? This is it. This is the first computation we did. His gross income is, we did it earlier now, all the basic housing, transport allowance, and bonus, incentive, overtime, if any, all of it. So that is it. But this is just, please take note, this just has to do with, that is employment in Sigma. I emphasize again, this has to do with his investment in Sigma only. Sorry, what am I saying? Is employment in Sigma Industry Limited. So that is in gross income in Sigma Industries Limited. Now we are going to also take out the deductions that is the deduction that is allowed to him. These deductions are actually also called reliefs or allowance. So they are given to reduce the tax burden. So before now, it was not calculated like this. There was a totally different rules for calculating it. But now the rules is different. So the first rule, the first relief here, which is applicable in his own case, is the pension contribution. So his pension contribution for 12 months will come in here. Why it is 12 months is because this one too is 12 months. Now rent allowance, his rent allowance will be 80,000. It's not going to be 500,000. So the total of these two figures, 608,000, which is here, will now be taken away from his gross income. So that answer we have is now what we call chargeable income. But
Okay, please let's give Mr. Edwards some time to come back. I think he's having network issues. Or can we confirm we can still hear him from your end? If you can still hear him, just give thumbs up, or even not, put your comment in the chat box. Okay, no sound. So let's give him time. Maybe he's having issues with network. We'll come back shortly. Meanwhile, you can put your questions and comments in the chat box. I've gotten questions from many persons. I have questions from Mr. Ato, Kevin, questions from Mabel, questions from August Sunday. So keep dropping your questions while we wait for the speaker to come back up. I know many of us are more peculiar with trying to get clarity with the areas that we are not clear on, and the speaker is here to answer all of them. So let's give you some time to come back up. Meanwhile, he has shared the link for how you can check your pay online, the pay calculator. I'm going to copy and paste it again so that we can have it. Okay, we have feedback from Mr. Ato Kevin. Said, is it a 3 hours webinar? I don't know if you've taken that time to look at the new Nigeria Tax Act. You know that it's quite exhaustive, and the speaker has taken his time to demystify and break it to simpler terms, and he has done that. He's trying to make it practical for us to be able to understand how these are done. Many times we get offer letters, we resume a new job, we do not know how these computations are made, and at the end of the day, we are more interested in getting our salaries. But this is how it is done, and I'm happy to have learned this. So back to you, Mr. Johnson. I think
yes.
we lost
sorry. Yes. I didn't notice. Please pardon me. Please, where did I lost you?
Okay, you are still on the Excel sheet, so I think if you go over to the Excel sheet, you can.
Okay, did I get to the graduated table before we? I have been. Hello.
Just share the Excel sheet again. Let's see where you are.
Okay, I'm sharing it. Okay. Oh, sorry, I didn't share. Let me share, please. You will not believe me that since then I have been talking to myself, not knowing that I was off. The network knocked me out.
Sorry about that too.
Okay. Please, not to worry, I am going to share these Excel sheets. I think I have done that already. Mr. Banum, can you share to your professional colleagues? Maybe by email.
Yes, you'll get it at the end of the session. The slides in PDF format and the Excel sheet.
Please take it as the item 6 of this webinar. You can even take it more than that. Okay, so so now I think I got to the I got okay. Can you see the Excel sheet now?
Yes, I can see the Excel sheet. I think you were at the other part where you have the applied graduated table.
Oh, thank you.
Yes, this is the part where you are. Yes, sir.
Okay. So I was explaining how the rates are applied. The rates are not just applied blanketly like that. You have to take out the first 800,000, take out the next take out the next 2.2 million, and now the remaining one will now be taxed at 18%. And take note that the 2.2 million will be taxed at 15%. So this is a little bit technical. So I was trying to emphasize that I was trying to get you to appreciate your employer, because before now, the burden of doing this calculation has not been on you. Your own is to collect your alerts at the end of the month. You don't know what the people in HR and finance go through to do this computation. So your own, sometimes you even abuse the HR that they do wrong computation, but you never know what they go through. So this is a little bit technical. You did not even bother to contact a professional accountant like me to see how it is done. So it is technical, no doubt, but it can still be followed as I explained. So when that graduated table is now applied and the figures derived, these are the figures derived when you apply the table. The total amount is now what is taxable. But that total amount is an annualized figure. Now, to get for 1 month, which is the month of January, because remember the source data for this computation was for January. So we will have to divide it back by 12. So we go back to 12, we divide it by 12, and we will have that figure. So this figure is 97,580,000. And take note, this is just for 1 month. So in other words, the effective tax rate of Mr. Okam is 14%. The effective tax rate is the tax figure, the tax payable divided by the gross income. So from the formula, you can see that it is the gross income and the tax payable that is taken into the consideration. So for Mr. Okam, it is 14%. Okay, so that is it. Now let us talk about other tax implications of this Mr. Okam's employment, income, and tax. But I will not just be talking. I want to do a small activity to get us involved. You also help me to see if you have been following the session all through. So I'm going to drop this form. I'm going to drop this Google form. On the chat box. So I will need you to those who are on call to use okay. So I have dropped a Google form link there. Please, I will need you to click on that form and try to respond to the question there. Then we will continue. We will talk further. I have seen some interesting questions here. Please, I will attend to all this. Hello? Please raise your hands if you have started to, if you have clicked on the Google form, please. Can you show with a raise of hands? Good, good,
Okay,
good.
we have people responding. I myself
Okay.
am also on the form.
Okay, okay, okay. Please let me unshare so that I will not disclose the responses I'm having. Please, I did this deliberate to make the session interactive because I know I am talking to professionals. So finance may be a technical to you, but I believe you have the intellect to understand and follow through what I have been doing to respond to this.
Okay, so how many responses do we have from Enter?
So far, I have gotten, okay, let me refresh. So far, I have gotten 4. I have on the call, how many persons do we have on the call? So let me have at least 10 before I proceed.
We have
42.
We have about
so
40.
let me.
Yes, sir.
Yes, yes.
Okay, so the link is on the chat. I'm going to copy it and share again to join this exercise.
There are just 2 questions
Two
there.
questions, yeah.
Just 2 questions, very simple.
Okay, site can be reached. Mr. John, I think you should check your network. I've clicked on it again and it's opening from my end. Please ensure you are using a Chrome browser or a browser that supports Google services because this is a Google form.
Please, after filling the form, also check your results. Check whether you have it or not.
Okay, I'm going to check mine.
Mm-hmm.
Okay, form response. I think I scored 1. I failed the second one.
Okay, that's interesting.
Okay, how many responses do we have now, sir? Oh, we have 10 over 10, Mr. Edo Jamil.
I've had up to 19. Very good. This is encouraging.
Okay, so we can proceed now, sir.
Okay, good. So on the average, at least, no one has, on the average, most people have 1. Most people have the 2. Most people have 1. Oh, I have seen 2 persons that don't have any. Please be encouraged. After all, you are hearing all about this for the first time. It's a nice trial. Okay. So let me proceed. So the first question was, please, can you read the first question for me, Mr. Abanu? Hello?
Okay, I'm trying to open the form again. So the first
Okay.
question was, which tax authority will be employer of Mr. Okam Sigma Industries remit his pay tax to? Number one is Delta State Internal Revenue Service. Number two is Ughelli Internal Revenue Service. Number three is Lagos State Internal Revenue Service. Then number four is Nigeria Revenue Service.
Okay. So, it is important as an employee to always know, to also know, though the obligation is not majorly on you, but it is on your employer. But it's also important both for the employee and employer to know the appropriate internal revenue service to remit the taxes so deducted from your gross income. So in this case, we learned that this guy works in, that the company itself is headquartered in Lagos, but this guy works in the Ughelli branch and he lives there. And again, excuse me, pardon me, there is some other information that his family, sorry, this is the slide. His family lives in Port Harcourt. So all these are a real life scenario that happens. So you can be working in a certain location, your family is living in another location, but when you come to tax, your tax, what they tax, the place of the principal place of location will have to be
Hello, Mr. Edward, are you there? If you can still hear Mr. Edward, you can put a thumbs up or, okay, no sound. I think he has network issues again. So let's give him some time. He's going to come back to join us.
Hello?
Okay, welcome back, sir. Welcome back, sir.
Yeah, the network knocked me out. Sorry, please, I apologize for this. Okay,
so we can also not see your screen too, sir.
Okay, I'm going to share. Okay, so the first question had to do with the right tax authority based on the residence of Mr. Okam. So the correct answer was actually Delta State Internal Revenue Service. So somebody may say, why is it Delta State Internal Revenue Service and not Ughelli Internal Revenue Service? The reason is clear, because the Internal Revenue Service are created for the state and not for the local government. So it is the state. Every state, if you open the law says, that paragraph says, every state shall have an internal revenue service, a tax authority called Internal Revenue Service. So now it now empowers each state to create that body for every state. So, and it is manned by qualified individuals. So Ughelli cannot do, Ughelli as a local government or a place do not have an internal revenue service. Rather, it is Delta State. So the correct answer there is Delta State. And also it is not Lagos State, even though the company is located in Lagos, even though the pay tax could have been computed in Lagos, they cannot remit it to Lagos State Internal Revenue Service. They have to remit it to the right revenue, to the revenue service of the state in which Mr. Okam is residing. So that is it for that. Now, the next question was, was inquiring about, is the income earned by Mr. Okam in Sigma Industries Limited his total income? So some people had it right, some people didn't have it. So the correct answer, there are actually two correct answers there. I did it deliberate. It was deliberate. So the first one was, given was the first option. Given the information provided in the case, yes, this is his total income. Yes, if you go with an answer, you were correct, because we do not have any other information at our disposal. So we are assuming that we have to assume. So we have to, those that picked this answer created a scenario and work with it. Remember, two answers can be correct at the same time. Even in mathematics, it happened. There is a famous equation in mathematics, not even one. There are many equations in mathematics that the answer are two. Example is that that algebraic equation that you have, the answer is 1 and minus 1. So now the second option was also correct, which is Mr. Okam needs to tell us more if he has other taxable incomes. So if you had selected that answer, you were also correct. So if we push Mr. Okam further, we begin to twist him further, we begin to probe him further. Are you sure? Are you sure? What about the dividend you receive? What about the rent you receive? We begin to probe. He may disclose to us. So those two options were correct. The last two were not correct. Taxes are not based on sentiment. So the third option was no, the tax calculator above is okay for the government. They should not be bothering him again. No, it is not operated like that. Tax is based on numbers. That is why I love it. I love numbers. So you cannot bring sentiment into it. So whether you can begin to say that you are the tax you are paying is too much based on one single income that you have disclosed. So the taxman will want to know that your tax is that you are paying is based on your total income. So you want to know all that. The next one is from his spending habits. It seems like he earns other income. No, we don't operate like that. The taxman don't use your spending habits to evaluate what you should pay as tax. It bases it on tangible concept like your income, your assets, your consumption. So your consumption, but based on numbers, so not just spending habits here. So the two options had to do with sentiment. So this is highly discouraged. So that is it. Now let us, if we have some more time, we can look at the second case. Mr. Abanom, is that okay with you, or should we take questions?
Yeah, I think I'll take questions considering the time. So can
okay.
Hand up.
No problem. I will still share the Excel sheets. So please, can I see the questions? But the questions should pertain to taxation of individual, please. I was also to share with you how to use the online calculator. No, let me take the question. I think I'd rather take the questions. So if I can go to the chat box, or Mr. Banom, are you the one that is going to read them out for me?
Yeah, I'm going to read the questions out for you, then you just respond. Okay, so for the first one was regards to that exemption for taxing for the military safety office for the military officers. So someone was asking if it also involves military or paramilitary officers too. Are paramilitary also included?
Okay. Should I take all the questions or I answer them one by one?
One by one is fine, sir. So we don't get lost.
Okay. So the person is asking whether it includes paramilitary. So
yes, if they are exempted from tax as well.
Okay. The law was very clear. if I open that slide, I have stopped sharing my screen. Let me even share again, please.
Okay, I think I just mention it so that we can save time also.
Okay. No, it was very specific. By military, it means members of armed forces of Nigerian Army, Nigerian Navy, and Nigerian Air Force. So it did not include civil defense or which other people carry gun. It did not include any other, but it did not include paramilitary, it did not include man o' war, it did not include which other ones, there are many. It did not include vigilante. So it only members of armed forces. I'm trying to get to that so that you can see for yourself. I like to read it out as how it appears in the law. Exempted income.
Okay, someone added forest
allowable. Okay, no.
I think we have that in the in a table.
Okay, no, it wasn't in a. It was not in the table. Slide non-deductible. Yes. It is under employment income, right? Okay, yeah, we are there. I'm here. Please, slide 11. So it says, the last one, I even highlighted it, wages and salaries of military officers. That, etc., was not, it did not mean that it include paramilitary. It was just other. Please, so the answer is very clear. It does not include paramilitary. Can we proceed to the next question? Please, again,
so the next
let me also
question
use the opportunity to emphasize that assuming the military personnel and other incomes, for instance, the military personnel has an inherited property, let me say palm plantation in the village, and is earning income of it from that plantation. That other income will be taxable. So the law is very clear. It's only his wages and salaries from his military service that is exempted. Please, let us be very clear about that. Thank you. Proceed.
Okay, thank you, sir. So the next one says, does this new tax reform also affect the VAT charge of 7.5 as stated in invoices? If I bought a machine here in Nigeria, will the vendor charge me tax on the goods?
Okay. This question has to do with VAT. So, yes, the new tax act does not actually change anything about the VAT rates we used to have. So the VAT still remained at 7.5. So, but it is more serious on VAT now. What I can say is the new tax act is more serious on VAT, such that if you don't charge VAT on items that were supposed to be charged VAT, you may suffer some, those expenses, those items may not be allowed for deduction in the computation of your profit. So VAT, the new tax act still has not done away with the VAT. VAT is still serious in the new tax act. In particular, the act that where you are going to find provisions for the tax for VAT is the Nigeria Tax Act and the Nigeria Tax Administration Act. So VAT is still working the way it used to work, and even more seriously, because that last provision, that last two items I read out for you, where we were doing non-allowable expenses, I emphasize that if you are a business person and you incur expenses that was supposed to be VATable, and that item is not, at the time of paying for it, VAT was not accounted for, VAT was not imputed in the invoice for you. That when it comes to computation of profit, taxable profit, the tax man will not allow you to claim it because tax was not imputed in it. So the implication of the tax man not allowing you to deduct that expense is that your taxable profit is going to be big. So the bigger your profit, the bigger your tax. So tax is still the way it used to be, and even more seriously. That's what I can say. That's my response to that question. The next question, please.
Okay, thank you very much, Mr. Johnson. So just because of time, we'll just ask Balikis to unmute herself. The other questions, we'll collect it and send to the speaker so that he can respond to them, and Wale will find a way to send it across all of the platforms where he got this information. So Balikis, I've asked you to unmute, so please unmute and speak.
Yeah, thank you very much. Good evening. Thank you, Mr. Johnson. Thank you very much. To think I was actually thinking of how to learn about this tax, and fortunately I saw someone post it on their status yesterday, and I had to screenshot and join the what's it called, the meeting. Thank you very much. My question is that I actually work in a law firm. It's just a one-man business. It's just a one-man business. And I think I'm working as the HR assistant, administrative assistant. Let me put it that way. But the thing is, we are just two that is working in that law firm. Just two. We don't have so when we want to receive salary, there's nothing like housing allowance, transportation allowance, or anything. It's just our salary, just our basic salary. Nothing like any other, or the pension or some other stuff. And also, when I want to create invoice for clients, when I want to send invoice to clients, before we do charge them 7.5. That was before. But I think for like 6 or 7 months now, we stopped. We don't charge them anymore. So while I was talking to my boss, and my boss was like, okay, that he wants me to go and learn more about this tax. How are we going to charge our clients with this with this new law tax? And also that he heard that when we want to create invoice or something, that there's on FIRS sites or something, that there's a way we are going to create the invoice so that the Federal Revenue Service will be able to, Internal Revenue Service will be able to remit the tax, probably like you said. But what I'm not trying to understand is that because our own what's it called, our income, should I say income, or the amount we charge clients is more than 800,000 naira, probably 2 million, 5 million, depends on what the client is, probably for property or something. It depends. That's our own what's it called, should I put, our own profits. Let's say our own profits. Aside the property might be 80 million naira, but our own gain or profit will be like, say, 5% of that 80 million naira. But now, are we going to be the one paying the tax, or when we want to send invoice to the clients, are we going to be the one going to pay the tax? That's one question. And the second one, is it okay for us to pay our tax instead of yearly? Can we pay it monthly, or is it the government that is going to give us someone that is going to come and, because our company is actually registered, is it that, are we going to be the one to be going to the tax office to pay for the tax, or there's a way we are going to connect the account or something so that they will be able to just deduct the tax from the company's account?
Okay. Please, can I get your name again?
Inka, Ola Inka
Okay.
Baldis.
Okay, Inka, thank you very much. Your question has many dimensions. I'm going to dissect it and address them accordingly.
Thank you very much.
So you work in a law firm.
Yes.
And
yes.
you presume that your role is HR assistant.
I actually, it is from administrative assistant. I'm just trying to transition into HR. Yeah.
Okay.
So,
okay.
Yeah.
Okay. So you are actually two in your firm.
Yes.
And before now, your salary is just basic. There is no all those bonuses, allowances, and all that.
Yes.
Good, please.
Exactly.
Okay. So you want to know, one aspect of your question is you want to know whether there is any obligation by the firm as an entity to be deducting your tax and remitting to the relevant tax authority, or whether it is you people by yourself that will be doing this computation and remitting at the end of the month.
Yes, that's for the employee.
For the employee, that is your number one question. If I
yes, sir.
Okay, so let me address that one first. So for that one, every employee is obligated, whether it is like in your case, it is a firm of professionals. So your boss, the principal partner, can be said to be the owner of the firm. Good, but the principal partner is the owner, and is your employer. In this case, he will be seen as your employer. Though the number of your staff strength is few, the law used to, in the formal law, there used to be a threshold. So the payee tax never used to apply for employees. For employers whose staff are less than 10. In that formal law, in such cases, it will now fall on the individual staff member to now pay their tax, do a self-assessment and pay their tax at the end of the year in such a case. So in other words, but in this new law, to be honest, I have not researched to know whether that threshold has been removed or not. I will confirm and give you a definite answer on that. But I also want to state that whether it is the new law or the old law, that the obligation of your employer to do payee, that is to be deducting your tax, payee tax at source and be remitting on monthly basis, is different from your own obligation to be doing your annual returns filing. I'm very, very happy that you asked this question. The very last slide in this presentation was going to address that. Annual returns. So annual returns applies to every person who has a taxable income, irrespective of what your employer has been doing. So what your employer has been doing is just, he will account for it separately, that he has been doing it. Why the answer is logical, because take note, your employer is only accounting for your employment income, whereas your tax is actually chargeable to tax, and whereas it is your global or your total income that is chargeable to tax. So you are supposed to at the end of the year, whether your employer is doing it or your employer is not doing it, to fill what we call a self-assessment form and submit it to the relevant authority. Before now, there used to be deadline. Okay, there used to be deadline. For instance, starting from for instance, for all your incomes, total income, take note of the word, I'm using the word total income, and by I want to believe that you know the difference between total income and employment income. So all you are supposed to, after at the end of the year, maybe the year ends, you have a 3 months window period. It used to be for 90 days. That is what the old law used to be, say personal income tax. But while I checked this law, this new tax law, the Nigeria tax law and the Nigeria tax administration law, I found out that the law has been silent. He has not stated the number of period you are expected to do this annual return filing as a person, that is as an individual or not your company doing for you. The one for the company, they also have another obligation to do another filing they call annual filing, which I
think most businesses do that every year. Yeah, most businesses do that every year.
It's not just only individuals. Sorry, it's not only businesses that is supposed to do that. You, as an employer, you are supposed to do it too. So that is the point I'm driving at. So the law has been silent. When I asked one person who is close to the tax reforms committee, I asked him that the law has not given number of days or months because the previous one used to be 90 days. He replied me that going forward, that there will always be a regulation or a circular that will give a deadline. So all this, we will see it come into play in 2026. So please take note that in 2027, because remember, the filing, all the income, the total incomes will be, the total incomes end in 2026 will be filed in 2027. So whether your employer does it or not, you have the obligation to also do it under the self-assessment scheme. I'm going to give the precise section of the law that states so. And then I also owe you a response to be sure whether your employers, because this is in the interest of your employer, whether he has to start doing pay tax remittance. But if I may ask, in the meantime, has he been deducting any tax? You say you only receive basic pay. Does he do any deduction?
No, what we do mostly is that when it is end of the year, I'll submit the salaries, the total salaries we have been paying, like that has been paid since January to December. Then when we calculate the total, you will sign. Then we normally file annual returns. We file annual returns for the company, the organization. So
I understand what happens. What used to be filed was the personal income tax of your principal partner. That is the owner of that firm.
Yes.
That annual return. That is his own personal income. That is what used to happen. So I am now, and he used to do that because the income he earns from the firm is just one aspect of the income. He may have shares in company in his personal name. He may have a cocoa estate. So that other one, by right, everything is supposed to file everything, and it's supposed to be chargeable. All of that of his income is supposed to be chargeable to tax. Now to your next question. No, please let me address this other interesting question, which is VAT on invoices. You said before now you used to impute VAT on invoices for your client, but you stopped.
Yes.
Because he told you that there is a platform you were supposed to register and be doing the invoicing online.
No. We stopped because it is actually this 2026 that it is compulsory. Like it is this year that people are not talking about tax more.
Sorry.
But last year we stopped because most clients we pay when we send invoice, we will let them know that okay, this is our professional fee. We will now put the VAT under. But some clients will be like, now with all this amount of money you want to collect from me, you want to still collect so amount. So we had to just stop it. But we find it when it is at the end of the year for the organization. But now there is no way we have to put it now because at least everybody is aware now that there is tax. It's not as if there is no tax, but at least everybody is trying to learn about it more. So she's now asking that are we still going to be adding it now, is it still going to be 7.5%, or there's how we are going to put it? Yeah.
Okay, I quickly respond. Okay, I must tell you that Mr. Taiwo Oyedele will be very happy that people are more upright and you feel that VAT, you are more conscious about VAT now. But it has to be clear that even before now, in the old VAT Value Added Tax Act, that you were still obligated to be inputting VAT. And another thing you have to let your clients to know that VAT is not an income to you. It is just a money you are deducting as a tax agent, and you have the obligation to remit that money to the government. So I don't want to put fear in your body, but if the now Nigeria Revenue Service, if they want to do a tax audit on your company, on your firm, you may have to pay all those VAT that you were not inputting in those invoices, and also pay a penalty on top. But let us just assume that they give you a grace period. Going forward, you have to impute it. So you have to input it. You have to let your client know your service is very, very vatable. It's just like in my own case, I work in an audit firm. And in our invoice, we are always careful to impute VAT. So that VAT is not our money. It is government money. At the end of the day, we will remit it. And the rate remains 7.5. The rate remains 7.5. And again, if you didn't mention it, let me mention it. You have an obligation to also register with Federal Inland Revenue Service. Already, I know.
We should register our company there, or
your firm, yes, of course, because VAT goes to Federal Inland Revenue. It doesn't go to the State Internal Revenue Service. It's only personal income tax and stamp duty and withholding tax and the rest that go to State Internal Revenue Service.
Okay.
Please. So that is when it has to do with individuals. So VAT goes to FIRS. So you also have that obligation. So if you don't want to be harassed and avoid penalty, because anyway, we're not talking about VAT today, but I like the question. I just mentioned it. There are very serious penalties when you default to pay VAT, when you default to fulfill, when you do not fulfill your obligation to input VAT in invoices that you are supposed to input. So your company really need to seek a professional accountant. Professional accountant for more advice.
All right, thank you very much, sir.
Okay, thank you.
Mr. Joseph.
Please remind me to send that, do that confirmation for you.
Hello, Mr. Joseph.
Johnson.
Hello, Mr.
Johnson.
Joseph.
My name is Johnson.
Yeah, sorry, Mr. Johnson. Sorry. Yeah,
yes.
Yeah, Mr. Johnson.
This is running up.
Yes. The subject of tax. The subject of tax is very big one. Anyone that wants to get further information should get your contact and discuss further with you, so that we won't just because we can keep talking till you can keep this till tomorrow. And I know you have a lot.
That is why I was specific. I said I want to do. Okay.
Or we have a part 2 some other time.
Okay, so thank you very much, Mr. Johnson. Thank you, Wali, and thank you for all those that have been on this session. We started around 5 o'clock. We had a peak attendance of 60 plus persons, and currently we have 34 persons on the call. And this is a wonderful and insightful presentation. So for those who want further insights, Mr. Johnson, how can they reach out to you? I know this presentation is basically on personal income tax, but we are having questions on a company income tax, and I think those will be on consultancy level. We need to convert this talking to money. So how can we reach you, Mr. Johnson, whether on personal income tax or for a small scale, large scale, or however way?
Company tax, VAT, value added tax, withholding tax, stamp duty, and capital gains. All of them.
So how can they reach out to you, sir?
Okay, by my email and phone contacts, I will drop it so that you can pass it on to your community.
Okay, you can drop it on the chat box.
Okay.
You can.
Okay. But please, I would like to respond to all the questions that we asked. So will you compile them and send to me?
Yes, we'll compile them and send to you. Then those that are not able to bring their questions, they will send them across to you. So you can stop sharing your screen so that I can share your certificate of appreciation for Mr. Wali to present to you.
Thank you.
Okay. So I'm sharing your certificate of appreciation. Please hold on. So over to you, Mr. Wali, to present certificate to our speaker.
All right, thank you very much. In fact, I don't think we've ever had any webinar that has been this long and insightful because of the need. Beyond just certificate, you are also be given an award for creating time, giving us your wealth of knowledge. Many people, even with the fact that you even volunteered to educate the public on this. FIRS or IRS didn't send you this. You took it upon yourself as a responsible citizen to volunteer to educate the public on this very important subject. And we sincerely and truly appreciate the wealth of knowledge that you have deposited into us. And we have really learned a lot from you. And on this note, I will be giving you I'll be presenting to you the certificate of appreciation for the 93rd Enlightenment webinar series. We have been doing this webinar series, and this is the 93rd one that we've been doing over the past 5 years. Even though it is more than that, but this is the one that is evidence-based, that we have evidence of, that we have been doing over the past years. And you happen to be a wonderful speaker for the 93rd webinar. And this certificate is presented to Mr. Johnson Edward for sharing his invaluable insight as a guest speaker at our weekly Enlightenment series on the topic, the new Nigerian Tax Act, how they concern you. And it is with my most humble self that I present this award of appreciation, this certificate of appreciation to you, Mr. Johnson Edward. Over to you, sir.
Wow, I am most humble and appreciative for this nice gesture. It's always good to share knowledge, because any knowledge that is not shared, to me, has lost its greatest value. So it was a good opportunity. I want to thank everybody that was in this call, and I want to thank Mr. Abanum Isakba in particular for reaching out to me. Thank you, and I look forward to another approach, another time, another session with you. And I look forward to the participants of this webinar to approach me on professional basis or otherwise. I will really be grateful. Thank you.
All right, thank you very much. And to add to that, I know many of us, apart from our salary job, we have side hustles that we do that requires tax consultant. Don't wait till it becomes big. In fact, the right time to start your tax. Many of us don't know that even without our small company that we have, we are supposed to be filing annual return. It can be 0 naira. We are supposed to be filing it, because after, I think, 1.5 years or so, if you don't file it, TSC will delist you, and when you want to come later to FIRS, they are going to charge you for not filing your annual returns and all those things. To avoid all this crap, get a consultant that will educate you. The consultant fee is most times yearly, and it's always something that is reasonable. And for someone like Mr. Johnson, I know that you'll be ready to give us, those that come through this webinar, more discount to engage him so that he can give you ideas on even how to avoid some tax. Let me share you a short story. Last year, was it last year or per year? It remains small. I should pay VAT of around, I think, 6 to 7 million naira or so. If not for the fact that I did not click, as soon as I click on that thing on their tax promise, maybe I'll still be in debt today. God, thank God I engaged a consultant who was able to help me to look at my account, the sales, the income, the expenses, and was able to bring the amount I was supposed to pay as my CIT, down to a very reasonable amount. Why am I saying this? Sometimes we pay what we should have avoided paying if we engage consultants. We might think that they are collecting money for consultancy, but they're actually helping us to save more. So if you need this contact, if you want to start a business or you already have a business and you do not know how to go about issue of CAC, filing returns and all those things, Mr. Johnson Edward is your go-to person. And I'm personally advertising for him because he has done a whole lot to take his time to educate us on this subject of tax. And thank you so much, Mr. Abanom Isakpa, who came all along and said, Mr. Waliu, let us invite him. He's ready to pour his knowledge. And you know me, anything that has to do with knowledge, I will never say no. And Mr. Abanom thought of it, a nice thought, a good way to start the year. Thank you, Mr. Abanom, for your kind gesture, and we appreciate you. And to everyone who has stayed out to this moment, if you have not registered for Setting the Pace 4.0, please register for Setting the Pace. Setting the Pace is almost here. It is less than 13 days to Setting the Pace, and we are expecting everyone to join us to start the year with high energy. Powerful speakers are ready to enlighten us. We are going to discuss about business, it's not even about, it is even beyond safety, professionalism. What do we need in 2026? How do we start on a very high note? You are invited to Setting the Pace. And for all your ISO courses, for all your health and safety courses, sustainability courses, please reach out to Cordal Safety Consult and be a part of our community. We are doing our part to enlighten us, to help us to build our enlightenment, to build our professionalism. You can also pay us a little by referring us to your colleagues, referring us to your organization, and engaging us on all your professional courses and all your IT certifications for your companies and so many other safety services that you need. We are always here for you at all times. Thank you once again, Mr. Johnson Edward. And on this note, I would like us to unmute and say a word as usual, the way we do every time. Unmute and let us say a word of thank you to Mr. Johnson Edward. We can all unmute now and say thank you to Mr. Johnson Edward while we close down this section. Thank you and God bless you.
All right. Thank you, Mr. Edward. I really appreciate your session. Thank you very much.
Thank you, Mr. Johnson Edward.
Thank you.
Thank you for creating our time to enlighten us about us. Solely, thank you.
Thank you, everyone.
Thank you, sir. Thank you very much, sir.
Thank you, everyone. Thank you. And I'll be counting as usual from 10 to 1 for us to close down the curtain. And I wish us a wonderful year ahead, a wonderful new week, first week of the year at work, a wonderful week, a wonderful month, and a wonderful year. Remember, time waits for no one. It's already 4th already. Tomorrow is 5th of January. Before you know it, we are completing January. Before you know it, March comes in. For those that are Muslims, before you know it, middle next year, fasting comes in, fasting goes. Before you know it, you're already in April. Before you know it, we're already talking about Easter. Before you know it, we're already talking about May, June. Before you know it, the year is already going. Time waits for no one. The time to start is now, and we are definitely unstoppable. If you have not registered for Setting the Pace 4.0, you can reach out to me directly and have the opportunity to still pay the discount that we are offering individuals, of discount of to pay 8,000 naira instead of 15,000 naira, which is the late registration fee. You are going to pay 8,000 naira when you register for Setting the Pace through this platform. And thank you all once again. I count down from 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Do have a lovely night rest and happy new week. Bye-bye.
Okay. Thank you.
Bye-bye. Thank you once again. Bye.